everybody, welcome to the channel. If you're new here, I'm Adam Black, your lender for your life, and I'm licensed in 48 states. My team and I, we help people all across the U.S. build wealth through their homes by determining the right mortgage options for them. Today, we're diving into our July mortgage and housing update, so stick around as we talk about everything from rates to the election to big changes coming in how real estate transactions are conducted and how it all ties together. We all went into July hoping for some downtime, vacation getaways, and some barbecues and pool time, but it looks like this month is anything but quiet. First, let's talk about mortgage rates. Rates are looking good right now. They're on the lower side compared to the last few months, and we're really feeling good about them. In fact, if you got pre-approved a couple of months ago and decided to hold off, now might be a great time to check back in with your lender. And if you bought a house last year, particularly my VA friends, it could be a good time to reach out to your mortgage professional or call me, and let's talk about the possibility of an IRRRL, which is the VA's super simple interest rate reduction refinance loan. Now, let's address the unpredictability in the world right now. It's hard to predict financial markets, inflation, job situations, and even political scenarios. We've had an assassination attempt on a candidate and intense political debates. And this previous weekend of this filming, we've had the Democratic nominee withdraw from the race. This level of uncertainty makes it challenging to predict if rates will indeed go down in September, which is what we've begun to predict. After the last Fed meeting, we were all skeptical about any rate cuts. But since then, the market has become optimistic that the Fed could begin lowering their rate as early as September and could do this multiple times over the coming months. This optimism is already making current mortgage rate pricing a bit better, as I talked about earlier. Keep in mind, the Fed is reacting to lagging indicators, such as inflation reports and job reports. For mortgage rates to continue to improve, we need inflation to go down and the unemployment rate to go up. The last few weeks, we've began to see this. Now, we need the Fed to land the plane softly. To do so, they have to be quicker to lower rates than they were to raise them. If not, unemployment, it gets away from them and they overshoot the runway. One would hope that they have good short-term memory and think back to how late they were to react to rising inflation when they suddenly began back-to-back rate increases because they drug their feet. They need to start now and incrementally bring things back in line. Time will tell if they are as smart as they claim to be. All right, moving away from politics, let's talk about the housing market. Some parts of the country are seeing more inventory, which is great for buyers. For example, several of my peers around the country have mentioned that they're experiencing slower activity despite having more inventory. This is because people are enjoying the sunny weather and they're not as focused on house hunting. In our industry, we have a unique flurry of activity that normally begins in March, peaks in June and July, and begins to taper through the remainder of the year. Those that wanted to move over the summer have normally done so by the end of July. We'll then have that back-to-school lull for the first 2 weeks of August, and then things will pop off again. This pop-off could be stronger this year if it coincides with good news around rates. So if you're still on the fence about buying, don't wait until you've found the perfect home to get pre-qualified or update your existing pre-qual. You need to be ready to pull the trigger and come in with a strong offer because remember, every 1% drop in rate brings an estimated 5 million buyers back into the market, and you need to be ahead of them. Now, let's discuss the upcoming changes in real estate transactions. Starting next month, August, buyers will need to negotiate real estate agent commissions and sign buyer agreements that lock them in with an agent for a specific period of time. This is a result of the NAR lawsuit, and it's essential to understand these changes. If you're presented with a buyer agreement, ensure the agent goes through it with you. Both the commission and the time period are negotiable. If you feel pressured or if the agent doesn't explain the agreement, don't sign it. However, I firmly believe that trying to buy a home on your own is a huge mistake. I've been in this business 20 years now. I've been a part of around 2,500 transactions, and I still believe that a buyer's agent brings so much value to the transaction. Now, with that being said, I do believe it's important for that agent to be able to articulate that value to you. Everyone is unique in what they need, and your agent needs to be able to determine and provide you specifically what's needed. This is going to be a hot topic over the coming months and one that you're going to hear more about. It's going to change how real estate transactions are conducted in the U.S., so stay informed. Take your time, do your research, make sure you understand exactly what's going on in this situation. Unfortunately, there are going to be less than scrupulous people try to use it to their advantage. I'll leave you with this and let it be the last thing I say on this subject. I love this saying. There's hardly anything in the world that someone cannot make a little worse and sell a little cheaper. And the people who consider price only are this man's lawful prey. That's about it for this month. I hope in August we'll have some clarity and better predictions. Until then, remember, like, comment, and subscribe for more updates. And don't hesitate to reach out to me, Adam Black, your lender for life, for more personalized advice.